What's up, guys? Sound check. Can y'all hear me? This is my very first live on YouTube. So just say something if you can hear me. Let me know that the sound is good. Well, I guess I could pull it up on my phone. Hold on. I guess I could. All right, I think we're good. 1 second. Finishing up my breakfast. Hold on. One more bite. All right, guys. Welcome. So, as you know, I've been committed to futures the past week or two, and it's been really fun, to say the least. It's been different. And when I say I'm new to futures, it doesn't mean I'm just now starting to look at price action. That's not what I mean. I've always looked at it. You know, each week I'll take a peek, see what's happening. So I'm not just brand spanking new. And you guys all know I know how to read price action pretty well. But whenever I say I'm new to futures, what I mean by that is I'm now putting risk on the line and I'm being active throughout the sessions on these lower time frames. And this past week in particular, and last week, there was lots of great opportunities, and it all comes from the model I'm fixing to show you guys today. The model is not one specific thing. It's a 3-step model pretty much. You guys all already know it, but you're here watching me because you want to hear me elaborate more on it. You know, see how I feel about it and how I view it. Everyone views price action different, okay? We can all study the same concepts, but all of our eyes are going to look at it and think about it differently, okay? So, one moment. My freaking dog got in here. You're too loud. Yeah. Let me check the comment section real quick. I know we just begun. I want to make sure. Oh, okay, there's a live chat. Okay, cool. All right, so you guys can hear me. That's good. Sorry about that. My dog busted up in the room. So anyways, so we all view the same concepts. We watch the same education. We follow the same people on all of our social medias. I think we all know what the trading model is. The #1 viral trading model. In simple terms, I call it the 3-step model. It's a liquidity sweep on an old high or an old low, wait for displacement in the opposing direction. When that displacement happens, let's go ahead and type it out so people with the language barrier can maybe read it. So step 1, whoops. And just keep in mind, this is my first time doing a live stream on YouTube, so bear with me. So step 1 is, a turtle soup liquidity sweep. And you may think you already know this model, so you're going to go ahead and leave the stream, but I wouldn't do that. I don't recommend doing that because when you hear me talk about price and you see the things that I see and the things that I view and clarify as PD arrays and what the market should do here and there, you're listening to my experience. You're listening to my train of thought. And that train of thought over the course of, 8 years, that's how many years I've been studying ICT, you develop it and it just gets stronger and stronger and things become more clear and clear as the years go by. So that train of thought is very important, and that just boils down to experience. That's your train of thought, your thought process, how you view these candles print. So step 1 is pretty much a liquidity sweep. Step 2, we're going to want displacement in the opposing direction, okay? Step 3, when that displacement happens for step 2, step 3 is kind of like 2 steps, okay? It's the final step, but it's like, I don't put step 4, it's just step 3. When that displacement in the opposing direction happens, it's going to do a few different, it can do a few different things. And I'll put that here. Hold on. It's going to create a few different PD arrays, okay? So it's not black and white. It's not going to be the same thing every single time, okay? We're going to be creating some form of imbalance, and we're going to have an immediate rebalance in the form of SIBIs, indices, or fair value gap fills, okay? The next thing that can happen would be creating an order block, and we revisit that. So the displacement creates an order block, okay? Or our breaker. Last but not least, inversion fair value gaps. These are my favorite PD arrays. These are the only arrays that I currently trade. I don't do mitigation blocks. I don't do propulsion blocks. I don't do, what's the other one? Rejection blocks. Sometimes I see that, but not live as it's happening. If I notice a rejection block, it's after the fact. So that's when you see your displacement is going to create these arrays. Okay, it should if you're hitting the right setup. And then step 3, which is the most fun step and the biggest step that'll drive you crazy, would be attack opposing liquidity. When we are attacking opposing liquidity, what are things that you want to see? You want to see price physically create and physically respect those arrays. Okay, so for instance, this is Monday's trading on NASDAQ. I'm on the 15-minute time frame. Here's Monday's open. We trade lower. We start to trade higher. We take out what? Zoom out a little bit. We take out buy-side liquidity. What happens after we take out that buy-side liquidity? And always, let's go ahead and put this. It's not going to be a step, but time. The time of day this needs to happen is anywhere from, it can happen around 8 o'clock in the morning, but I'm not going to be taking those trades. I'm not. My trades have to form around 9, anywhere from anything after 9 a.m. So, finesse, if the setup occurs at 8:45, are you going to take it? Yes, I'll take that. That's part of that macro of 9 o'clock. These macros are really sensitive. They're very important, but overall, anywhere from 9 to about 11:30 a.m. Okay. Let's fix that up. And I'm going to show you guys the examples I seen every day, and I'll show you guys the trades that I took every day. So write this stuff down, screenshot it. This video will get posted afterwards, but now we're going to say goodbye, okay? So here's Monday's trading. We open, we run buy-side liquidity. What time did it happen, guys? If you look down there, it says 9:30. Now, this is my signature. You guys aren't going to view this as an order block, but I do because this is my enhanced order block, my EOB. I'm sure you guys have been hearing me, seeing me post about that quite frequently. There's a guy running, I'm not even going to get into that. Okay, wait. So yes, this is my change in the state of delivery order block, my CISD, where we have the buy-side liquidity sweep, and then the very next candle plummets and trades below the low of that last up-closed candle. As soon as this bearish candle closes, I am now bearish. So we went from a buy program where they're respecting bullish arrays on this side of the curve. And then as soon as this one down close candle closes like this, I'm now going to be interested in the sell program. Okay, I'm going to wait for the next candles to open, trade up into the wick to body of this bearish enhanced order block. And I like to see my order blocks with the wicks on them. Okay, I would expect price to open, power of 3, trade up into this zone, and then go lower. Where are we going to go? Sell side liquidity. So here's your steps. There's your step 1. Here's your step 2. They create the order block. That's going to be your array. And then step 3, opposing liquidity. This is a 15-minute time frame, so you're not going to see them create many other arrays on this time frame. But let's play this out, and then we'll break down into lower time frames and see how price behaves. Let's see if this plays out for one. My stop loss would go at the enhanced order block high, which is here. First targets are going to be equal lows. When price action is this clean, you gotta love that. You gotta love that. Okay. So a beautiful setup right here. Open, power of 3. They trade up into the enhanced order block, and then they trade lower. So 1, 2, and 3. And that's on the 15-minute time frame. Time frames are very specific and they're very important. There's not one time frame that you need to stick to. There's not one time frame you stay on. I personally, I'm flipping through my time frames like a mofo. I'm always changing. If I don't see something on one time frame, I'll just drop down, go to the next until I see something. That's how I handle my time frames. So this example on Monday, on the 15-minute time frame, was beautiful. If we drop down, we'll start at 5 minutes. So that 15-minute bearish order block created a 5-minute sell side imbalance right here. They came up. It's also a breaker. We got our down close candle here prior to the aggressive pop that taken out buy side liquidity. We get the market structure shift lower. They take out sell side liquidity resting all below here. So here's step 2. We're rebalancing a 5-minute sell side imbalance. We're trading into a 15-minute bearish order block, and then we have resting opposing liquidity below here. So we want to see these lower time frames physically create and physically respect bearish PD arrays. Do they do that? Let's take a look. So here's our zone. We have the displacement lower here. Every time they create a large down close candle, we want to see it get rebalanced and then continue lower. So we have the up close candle, larger bearish candle, boom. What do? Open, rebalance, trade lower. Here's the up close candle prior to the next one. They close below it. That green candle, the bullish candle, is going to be your order block. Every up close candle prior to the down move, when you are in an active sell program, should hold up as resistance. What happens? The very next candle opens, stabs up into the order block, and then immediately trades lower to take out this black line. What's the black line? It is the sell side liquidity. You can take partials there and then, manage your risk, and then you can catch the rest of this move. You've already paid yourself, and then emotions should be off the table. What happens? They trade back up, fill in this fair value gap or the sell side imbalance. They make another low. So before breaking down lower, what do I always teach? If you guys have been following me for some time now, I get pretty deep into consolidations before breakouts. I've talked a lot about that. I have videos on my YouTube about that. I've posted screenshot little threads on Twitter about that. And I want to give you an example real quick. So what happens before a breakout occurs? Before price can take off, what needs to happen? Well, some form of consolidation / accumulation needs to occur before a price run. Okay. So here, this pink zone, again, is our 15-minute enhanced order block zone. Price is consolidating inside of that. Let's go ahead and note the consolidation, and let me remind you what happens before breaking out of a consolidation. Price should more than likely trade to equilibrium, tag equilibrium, and then break out. So I'm going to take this trading range, wicks, bodies. Here's the body of the consolidation. What I'm doing here is for fun. I don't expect anyone to... You can start doing this when you see consolidations, not on a 1 minute time frame. Do this on your own, but don't try to trade using this. This is just for fun. Okay, this is how perfect you can get. This is an ICT concept that I learned from him. Here's your consolidation. We're inside a premium 15-minute enhanced order block. What should price do before breaking out of consolidation? It should tick equilibrium. How do we know that's a true equilibrium level? Well, like I taught in the GBP USD weekly dealing range, I talked about that a lot. Every day I was posting about it. You look left. Have they most recently been playing with that level with candle wicks and candle body closures? If the answer is yes, then you probably drew out your dealing range or your consolidation range properly, and you have a real confirmed consolidation. So if we look left, look at all these candle wicks right here, just stabbing equilibrium. They trade below it, we go back up, we hit it. This candle wick low right here ticks it. Then these candles right here, the bodies are unable to close above it, and the wicks are tapping it. That's how you know it's relevant. And then what happens? We finally break out. So before the breakout of a consolidation can occur, you want to see them play with equilibrium with candle wicks and candle body closures. That's just something fun I wanted to show you guys. Price breaks down. And again, this is the 2 minute time frame now. We want to see them physically create and physically respect bearish PD arrays. Do they start to do that on this time frame? You damn right they do. Here we have a swing high. Here's a swing low. If you missed the 15-minute order block, there's always a chance to get in. If price has not ran to your overall objective yet, you can always find an entry because we are trading on these microscopic time frames. That's the beauty of it, and I used to hate on it. I'm not gonna lie. I used to talk a lot of crap about people on these 1 minute time frames. I personally, I've always traded on 5 minute, but I always told everyone and myself that I would never go to 1 minute. But truth be told, I'm a believer now. You know, price action can get messy on that 1 minute time frame. You are going to be taking more stop losses probably at first until you really get the hang of things. But you can draw your fib here from swing high to swing low. What happens? OTE, 1 minute premium. They fill in the fair value gap here. There's your entry if you missed the initial entry. And this is what I mean by filtering through all of your time frames, because every one of these time frames that you keep going lower and lower, you want to see the same things occur. You want to see the market look like it wants to go lower. You want to see them physically create and physically respect bearish PD arrays. What happens after that? After they trade up and hit that fair value gap, it's also blended with this up close candle prior to this back to back to back down move, which is a bearish order block. Do they hit it? Yup. Perfect. With the fair value gap fill, OTE, premium, after 15-minute order block, then they trade lower. As soon as this first candle respects the fair value gap and the order block and trades and closes below this up close candle, that's the type of stuff I'm looking at every single day. That's how I developed my enhanced order block, okay? A lot of people are going to trade this. Oh, here's the last up close candle prior to this aggressive down move like this. So now I'm wanting to wait for price to trade all the way back up to this last up close candle, use it as a bearish order block, and go lower. No, I used to do order blocks like that too, long time ago. But after viewing price action for so long, I've now only do them like this. I'm waiting for the very next candle to get in. Power of 3, open, trades up into the wick to body. Then I want to go lower. So as you're back testing, as you're studying price action, these are some of the things you just want to start looking at every single day. You want to just go find the arrays that were most recently respected. What that's doing is it's training your eyes what to look for, what works, what holds up in the market. And I'm showing you right here. This candle opens, trades up into the order block, and then we go lower and we take out them equal lows. Here's a big old sell side imbalance. No wick sell side imbalance. That's one of my favorite ones to trade and to see. This candle here has no wick on it, but is blended with this fair value gap, SIBI. So the market trades up, fills that in, then goes lower. This little up move right here, from this swing low to this high, that fills in this sell side imbalance right here. This up move, this is a 2-minute chart. If there was a such thing as, I think there is, isn't there a 30-second chart? If there is, I guarantee you we would see a 30-second market maker sell model right here with this fractal. Why would this be a 30-second market maker sell model? And I'm only saying that because I'm on the 2-minute time frame and price is fractal, so it's all the same thing. Because as price is moving higher, it's respecting bullish PD arrays. And you may think, oh, price is going to go higher. No. Down close candle, bullish engulfing, wick to body, order block, trade down into it. They respect it, trade higher. Where's it trading higher to? This sell side imbalance, and then they dump it lower. So on that 30-second time frame, this would be a market maker sell model. And then relevant to the 30-second, this 2-minute would be the higher time frame. You get what I'm saying? If not, whatever. Sorry. I think it's crazy. I think price action is just crazy. Anyways, they rebalance this because price is always doing what? Taking out liquidity and filling in inefficient price action. Is this inefficient? Yes, it is. It's only one-sided. They only offered it on the sell side. And then they trade lower and make another low. Okay, enough with this. Now we're going to... That was just the New York session. When price action finally makes its low, make one more low. Maybe you want to trade the PM session. What time does PM session start? What is it? 2 o'clock? Where's the liquidity resting? Well, we got equal highs here. So when price is down here, what do you want to see happen? You want to see them physically create bullish PD arrays if you think they're going to draw higher. We have all these highs right here. The very first respected bullish array to me. We have this fair value gap here. This is a 2-minute. I need to get off this 2-minute time frame, but it just looks good. They trade down, respect that, trade higher. So that PM session is heading here. Let's go to the 1-minute. Here's the 1-minute time frame. There's that 2-minute fair value gap. Down close candle, bullish engulfing. The very next candle opens, trades into the down close candle, trades higher. So every single time they print a down close candle, we can expect them to engulf it with a larger bullish. And how many times does it happen? Here's another one. Down close, bullish engulfing. Buy. Stop loss goes at the bearish candle low. They respect that. Why are they going to respect that? Because they're in a hurry to take out buy side liquidity. When price is programmed and it's trending one direction, it's going to create and respect the PD arrays until their objective is met. I showcased that a bunch in Forex for all of you that follow me in Forex. But let's get away from Monday because this is going to be a long ass stream if I don't. I'm going to go ahead and hit. All right, I'm not going to spend that much time on these other days, okay? So that was Monday's trading. Here's the 15-minute time frame. That was Monday's trading, okay? The very next day, this is the day I gave the setup out live, a pre-market, pre-session analysis. I started on the hourly time frame. I'm looking for, before my session starts, I'm going to go ahead and scan the market for arrays and what could possibly be rebalanced or revisited. Okay. So before that session started, price action looked something like this. The level I had in mind was this buy side imbalance, this bullish fair value gap right here. What is resting above this fair value gap? Well, we have an old low right here from the previous day. Okay. They stop shy on purpose to engineer the liquidity. So I've taught this a lot before too. The markets always stop shy 9 out of 10 times before they head to their intended overall level to engineer liquidity, and then they'll sweep it and then hit the array. So that was our bias going into Tuesday, and then we're going to break that down. Then we traded down into it right at 9 o'clock in the morning. Why is the time saying something different? What the fuck? I mean, flip. Okay, yeah, so here's the new day. Why does it say? Hold on. I know this is the setup. This is throwing me off. Bear with me. Someone tell me what I'm doing wrong here. I just got all thrown off. My bad. Oh, the time just, it says 1800, but it wasn't at 1800. That's all. Oh, duh. Jeez, oh, wheeze. Are you serious? I'm looking at today. This is today, is it not? Whoops-a-daisy. Okay, yep, that's why I got thrown off. Jeez, that's today. Sorry, guys. My bad. All right. So, what day? Right here. Here we are. All right. Much better. Hopefully I didn't just lose some of you right there. That was a little blank moment. So here's that fair value gap. I'm coming into the new day. This was Tuesday's trading. I'm finding the array I want to elect to use that price could potentially come down into. So I'm expecting price to trade down into this fair value gap. And again, we're thinking of our 3-step model, okay? I'll show you when we arrive. Let's hit play. Let's get towards that. $8 o'clock in the morning. Okay, here we are. Price action looked just like this. These up close candles had printed. This could be looked at as a sell setup. You could have the idea that price is wanting to fill in that fair value gap, okay? Because price does what? It fills in inefficiencies and it takes out liquidity. What do they do first? This one's at 8:30, but all these up close candles, they take out, here's step 1, they take out buy side liquidity. And then what do we have? Opposing liquidity. And this is a low resistance liquidity because this low here is higher than this low here. But what's resting below these lows? That hourly fair value gap over here. And also on this 5-minute chart from yesterday, hold on, I gotta throw this in there. Why is this price point relevant? Well, on the 5-minute time frame, I forgot to show this. Okay, down close candle, bullish pop, fair value gap, order block, wick to body. They rebalance the fair value gap, hit the order block, engulf higher. Boop. What happens here? Is this not an example of my EOB from the PDF? Look at that. Beautiful. Down close candle, bullish engulfing, wick to body. That's your entry. Stop loss goes below the bearish candle. Open, trade to the wick to body because that's going to be the sensitive zone. That's why it's enhanced, people. And then they trade higher aggressively to close out the day. All right, back to Tuesday. Just letting you know, I'm not even looking at comments. I'm just focused on just talking about what I want to talk about. All right. I'll read comments. Hopefully you guys aren't talking mad shit. I mean, who cares if you are? But so here is your dealing range. Price takes out buy side right at right around 9 o'clock in the morning, and then they come for sell side. Why are they wanting to come for sell side? Well, easy resting sell side liquidity with our intended level here. So they take that out. I participated in a sell right here. It was a super late entry. It was actually like in the middle of this bearish candle because I knew what was about to happen. Because this is the play I called out in advance when price is up here. But I was wanting to be a buyer down here because I wanted to buy NASDAQ because of these highs. I need to reset my view. So my plan was to drop down and have this be one here. So there's your turtle soup, liquidity sweep down into the hourly fair value gap. So there's one. To find two, you're not going to see it on this 5-minute time frame. Do you see a bullish PD array get created on this 5-minute time frame? I don't, guys. I don't. So when that, like I said, when that happens, oh man, I didn't trade today. I didn't see nothing. Because I don't see nothing. No long entry signal is right here. You just need to break it down to the next lower time frame. And you're eventually going to see it. Now what do we have, guys? Oh, shit. I bet y'all's eyes are drawn right to it. I know they are. I know your eyeballs are going right to where mine are. Let's see. If you are looking at this, boop. Good job. I love you. You're paying attention. All right. So that 5-minute time frame did not show an entry. So a lot of people are telling their friends, oh, I didn't trade today, man. They didn't give me my entry. Well, they don't know exactly what they're doing just yet. I'm not going to talk crap. It just takes time to learn. But here's the 3-minute time frame. Who trades a 3-minute time frame? Fuck, Finesse FX sure does. Anyways, down close candle with the wick. I like to have the wicks on mine. And note, it happened after hitting our hourly, our 1 hour fair value gap. So we taken out sell side liquidity. Boop. We hit a higher time frame PD array. And then we physically create and physically respect a bullish PD array in the form of this enhanced order block, which is the wick, the body, extended out in time. Stop loss would get placed at the enhanced order block low, which is here, because sometimes it can trade down into consequent encroachment of it, or sometimes you'll get stopped out. It's just how trading is. Nothing is for certain, but we're dealing in probabilities. Note when price was running lower here, they were respecting the sell program. We have this sell side imbalance. Price rebalances it. Here's the up close candle prior to this down move that engulfs. The next candle opens, trades up into the bullish candle in the form of what? Bearish order block. And then that's when I took my short. And then they trade below these lows. So here is the ICT 1, 2, 3 setup. Liquidity grab, straight to bearish price action. PD arrays. Respected. It's in a sell program now because they were doing what? They're creating and respecting bearish PD arrays. So you should automatically assume price is probably going to want to head for these lows. And then our smart money reversal happens at this higher time frame PD array because the algorithm had just liquidated all sell stops resting below here. Everyone's chasing shorts now, but if you don't know where you are relative to that higher time frame, you're going to get reversed on. And then this is my all-time favorite entry. I have files and folders of probably close to 500 examples of this. It's the first thing I like to see when it comes to change in state of delivery. A lot of people are going to need price to break above this high to be a change in the state of delivery. No, 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 no. I disagree. Anyways, 3 minute enhanced order block. Let's see what it looks like on the 2 minute. Down close candles prior to this aggressive bullish pop. That's the 3 minute order block. And they trade higher. Nothing too crazy. Here's the 1 minute. So here is a bullish displacement. Boop. What do? They open, they rebalance the bullish displacement. If you were to look at your 3 minute time frame, let's say you never looked at that 3 minute time frame in your life and you're trading on this 1 minute only, well, then you just happen to go to that 3 minute and you see a bullish order block. So there's a bullish order block on the 3 minute, but now we're on the 1 minute. So we're expecting this zone right here is the 3 minute EOB zone, okay? So that's why we're going to trust this 1 minute rebalance of the bullish candle. We're going to trust it to hold because price is fractal. What happens? Bullish pop above the bearish candle. I get this question a lot. It's hard to answer with a yes or no, but they don't always have to close 100% above that candle wick of the order block, okay? This would be an engulf to me. The very next candle opens, trades down just a smudge, and then they keep it higher. So this was the trade that I took, and I got my run, and I did enter down here. I entered way down here, and I'm not gonna lie. This was Tuesday, so I was getting warmed up. I was in my buy down here, and I can show you guys after this video if you want to see. But I was in my buy. What was I concerned about? Because when we have an active trade running, we're always concerned about the opposing PD arrays. What do I mean by that? Well, if I'm buying here and I see a bearish fair value gap right here, that's going to be kind of scary when you see this candle trade up, boop, fill in the fair value gap, and then close below like that. And then this very next 5 minute candle starts to trade lower. That scares the shit out of me to this day. But I was able on Tuesday to stay calm, trusted the plan, and I was like, okay, it is what it is. I'm trading my plan. And the very next candle, they disrespected the bearish fair value gap. So I love to see that. But it does mess with your psychology a lot when you're buying and then you run into these bearish arrays. That if it was bearish, this would send it lower, or it should. So my targets were these equal highs. We didn't quite make it that far. This was something I called out though, right here. All these up close candles prior to this back to back to back to back down move would be my breaker zone. All the candles extended out in time. And the reason why I'm highlighting all these candles is because there's not one single bearish candle in between the bullish move. Same thing for the down move. There's not one bullish candle in this run lower. That's what I like to see when it comes to breakers. I didn't have the guts to hold this trade throughout all this. I'm just being honest and transparent with you guys. But I did call this out as a support level in the form of a bullish breaker to attack the highs. I got out of my trade up here at this high, and then my stop got moved under this bearish candle's low because I told myself if they come down there, they could maybe find support with the breaker, the top end of the breaker, and this bearish candle, which is a bullish order block. That's what I was telling myself anyways. But they were having no part of that, and they traded all the way down inside of that breaker zone. Then the lunch session comes. I was already away from my charts, but what happens for the lunch session? They respect that breaker. And where do they trade to? My original target. So there'd be step 1. Step 2 is any of these arrays that I went over on that 3-minute time frame, the 1-minute time frame, 2-minute time frame, or it could be the breaker here. That's your step 2, because you see the step 1, stop hunt, step 2, displacement. And then they start physically creating and physically respecting bullish arrays. And then step 3, finally, opposing liquidity. So this model takes practice, but believe it or not, I've always kind of traded like this, you know, but not on the 1-minute time frame or 5-minute time frame at that. But I just found, for me being such a hardcore, diehard Forex trader, I've found that it does not happen as frequently and as often as it does on NASDAQ. And that's why I'm choosing, like I see it all the time on these NASDAQ lower time frame charts. And that's why I'm switching to this, because I love this model and everything it stands for. Everyone's coming up with these new models on Twitter and social media, but guess what? It's all just this. Whether it's this order block entry, whether it's this breaker entry, whether it's this inversion fair value gap entry, it doesn't fucking, excuse my language, it doesn't matter. Whether it's CRT, because if I zoom out to the fucking 4-hour time frame, this is going to be the 4-hour high, and this is going to be the 4-hour low. So now we have CRT. They take out the low, and then they take out the high. It's all ICT concepts. I feel like everyone on social media, on Twitter especially, they're all marketing. They all pick one PD array, and then they just jam it down everyone's throat. That's the only way to trade. That's why in my bio it says I'm a PD array genius, because I use them all, and I'm really good at all of them. There's not just one. I don't market just one. I market all of them. It's all ICT. That's why it gets under my skin. But anyways, we don't want to jump in. We don't want to start with that conversation. Isn't this beautiful though? So here, and then you just want to tell yourself, you know, how does price run? Well, we need accumulation, manipulation, distribution. That's the model. Without accumulation, there's no manipulation. Without accumulation, there's no distribution. Without manipulation, there's no distribution. So you need all this stuff. And this is just the type of stuff you want to be looking out for every single day moving forward. I don't care if it's hindsight. Go find this stuff. Tag me on Twitter. Say, you know what, Grant? You're really helping me backtest now. Say congratulations. I'm happy for you. If you already know all this stuff, then stop watching and go carry on. Anyways, let's move on. In order for me to move on, I need to find out where I'm at. So, there's Monday, there's Tuesday's trading, which was beautiful. I wish I would have been involved in the bullish breaker move for the PM session. Believe me, guys, when I pulled up the charts after I got done doing what I was doing, I was pretty upset. Oh, don't get upset. You're not a real trader. You're supposed to not have any emotions at all when you're trading or about price action. Yeah, give me a fucking break. I get upset. It's fucking trading. You're not a human being if you don't get upset. So that was, here's Monday. We went over that. Tuesday, went over that. Moving right along. Wednesday, I traded this day also. I told everyone to look out for all the lows that were created from the past couple days when price was about right here. I already had it in mind, but I didn't get to post it in my Telegram room until about like right here. And what's resting below this low? So we're going to go ahead and break this off. So my higher time frame array for Wednesday was this bullish buy side imbalance. Granted, price did not make it down there. Does that mean your model doesn't work? Does that mean the system doesn't work? Does that mean ICT doesn't work anymore? No, it just means price didn't come all the way down there. You guys can all agree with me that sometimes price does come all the way down here and fills in this buy side imbalance, right? Right. So I was selling to take out these wick lows and to trade into that buy side imbalance. I'm going to show you what I sold. It was all up in here. These up close candles, I sold into that. Look left, we have a no wick fair value gap. I notated that had already happened. So I sold, and to believe it or not, I can't even calculate the fucking I'm still in the pips, guys. So don't make fun of me yet. So I need this. Oops. How many ticks? Points. If someone wants to teach me how to calculate that stuff, that'd be cool. Oh, he doesn't know how to calculate it. I can already hear it now. So some guy tried to clown me in my comments saying, oh, you was selling, and he said I was selling like way down here. Actually, he put an arrow to like the daily low and was like, oh, Finesse was selling down here. No, dude, look at the picture again in the Telegram room. Actually, the picture you posted, my sell was way up here. What is that, like, is that 750 points? Or 186 points? Ticks? Whatever you want to call it. Anyways, price ended up stopping me out pretty much break even. I took like a $50 to $100 loss. Whoop-de-doo. Because price traded up. I put my stop loss break even. Oh, hold on. Let me go back to that 5-minute time frame. So price had traded below all those daily lows. They stabbed below this low. Then one more time they stabbed below this low. What time of day is it? Oh shit, did we discuss time of day on Tuesday's example? If not, well, you guys already know. It was during a kill zone. It sure was. It was during a macro also. So I was live streaming, or I was trying to record a video on this day, Wednesday. And I didn't want my video to get messed up. It was recording on OBS. And I wanted to keep it on one time frame. So I wasn't able to flip through my time frames and see what price was doing. And that's my excuse and I'm sticking to that excuse, damn it. That's my excuse. Anyways, I got stopped out by a couple points. Lost a little bit of money. But if I would have been able to go through my time frames, I would have caught this, okay? And I would have got out a lot sooner. So here is your 950 to 1010 macro. Here's the last low. Here's your up close candle. Here's your down move. So there's one. Here's your displacement higher. Oh wait, I did get in this trade. Okay, we're about to go there, guys. We're about to get in there. There's step one. Step two. Here's a swing high. So there's a market structure shift right there. But also, once we break this down, you're gonna see more stuff. And then step three, our immediate step three can be just the highs right here. And this is the trade I took. But before I drop down, I want to go ahead and show you guys. If I make this like this. Oh, this is the day that really, okay, yeah. So I took profit right here, and I'm going to show you my entry. I believe I posted this one on my social media. Edit with ICT's voice in the background. I like doing those. I just need some cleaner screen recordings because mine are I'm always like moving the screen, and it just, I'm still working on the content creator in me. I'm still working on being a cool content creator, but it's really hard to manage content creation and be a full-time day trader. That's why I call out a lot, and I'm gonna stop doing this eventually. I know I'm an asshole on the internet, but I'm not an asshole in real life, I promise. But that's why I call out these guys, because I know if you are spending, I know how long it takes to make content, and that's a job in itself. So for a lot of these guys posting these crazy edited picture threads and PDFs every single day of every week, damn, that's a lot. I know you ain't backtesting, and I know you're not looking at price action. Because while we're all trying to learn how to trade, and while we're all trading, you're over here making PDFs. And those PDFs take forever to edit and make. And they doing them every week, this, that, and the third. But that's just some humor. So here's your up close candle right here prior to your back to back down move that takes out sell side liquidity and the sell stops. If you are paying attention, and if you are in my YouTube live stream right now, I haven't even looked at the comments, so I don't even know what you guys are saying. You guys could be hating me. I'm going to bless you with my breaker secret. Okay? Yeah, I already know it. Oh, it's not a secret. Oh, we already knew this. But here's one of them. Okay? And I already said it in the previous day's example. When it comes to breakers, I want to see the back to back. I don't want to see a bullish candle involved in the stop run. Notice it's just 2 consecutive down close candles that take out stops. On the way up, there can be a bearish candle. There sure can. But there's not, which means it's even better. But when this candle right here trades up, we trade above it, and we close above them, the very next candle does what? Opens power F3 into the bullish breaker. Stops are going to get placed at that breaker low. Technically, it could be like the body low, but spreads and stuff like that, I don't do all that. And then we trade higher. Okay, what happens before this breaker entry? Here's your down close candle. The very next candle, okay, this is what I mean. This is what my eyes have just been adjusted to over the years. Down close candle. Usually I want to see a bullish engulfing and a close above, right? But notice this one doesn't even come close to closing above. But how come the very next candle opens? Boop. We trade down. Where does it trade down into? Trades down into this bearish candle. This is a super advanced style of trading. I don't want you guys doing this at all. But and then these 2 candles right here on the sell side of this curve, because this is a curve, I could go ahead and draw a vertical line in the middle. This is something I did not talk about in the previous 2 examples, but I wish I would have. Hope maybe you guys can go do it on your own. Every time you have a swing in the market form, you are able to draw a curve. It's delineating the sell program versus your buy program. On the right side, the buy program, you want to see bullish arrays get created and respected. They should also blend with the arrays on that sell side, left side of the curve, the sell program. Do they right here? Yep. Look how that sell side of the curve, buy side of the curve. And these candle wicks right here are relevant with this right here. It's the gray zone ICT just taught. Anyways, and then it stabs into this bearish candle. And then we start going higher. Breaker entry, fair value gap. They close above the fair value gap. That's when all the kids on Instagram will say, I'm buying, I'm buying, I'm buying, I'm buying, I'm in, I'm in, I'm in, I'm in. All right, I'm out, I'm out, I'm out. Getting out here, getting out here. Do you think any of their viewers actually were able to get in that buy? Fuck no. The next candle opens, trades down, rebalances the previous bullish candle, trades into the inversion level, I guess. I'm not big on inversions, but this is it. And then we trade to here. Now, this isn't even what I framed my trade on. Let's go to the 3 minute first. Look how beautiful that is. And there's that. Let's go down one more. 2 minute. Oh, now we're talking. Now we're talking. Let's get rid of this. You guys know the steps. Okay, so I don't need to keep that on there. This is the Venom. This is ICT's new Venom right here, where you got a large sell candle, takes out stops, and it's a swing low right here. And then you have the larger bullish candle. So that's the Venom model. And I only watched his Venom teaching for like 30 seconds and I learned it and I was done. But then what happens? Here's your breaker zone. Down close candle. Bullish engulfing. They create a what? A buy side displacement. They rebalance it. Keep it higher. What happens after that? Here's my entry that I live streamed. Not live streamed, but traded live. This was my entry right here. 1 second. This is where I got in. So I took my initial loss that people were making fun of me, or the specific individuals making fun of me, because I got stopped out, pretty much break even. But I was able to adapt and get in sync with the market. That's the difference. I went long here, targeted these highs up here, and that was my trade. I don't know how many fucking ticks it is. I don't know how many points it is, but that was my trade. Here's your down close candle. Here, prior to the bullish engulfing candle, what happens? They open, trade into the bearish candle, which is a bullish order block. Note that that happens after they already respected all of these arrays. So you want to always be looking, what has price most recently done? And this is that 5 minute breaker, Venom, inversion, fair value gap, whatever you want to call it. I don't even care at this point. You want to see them create and respect the arrays. 1 second, guys. I'm on my Mac. I don't have a desktop, believe it or not. I got a Mac, but I gotta plug it up or else it'll die and I'll be sad and I'll probably cry. Hold on. Okay. So this is what made me sad on this day. I took my loss, and then I got my loss back right here, plus some profit. And I went ahead. Got a speech impediment today, guys. I went ahead and took my profits as soon as price rallied above here. I got scared. I just wanted to go ahead and pay myself, and I took profits. When the PM session blasted off to outer space. And what's still happening, guys? They're still respecting bullish PD arrays. Where, Finesse? Where? Down close candle, bullish engulfing, fair value gap, OTE from the swing low to the swing high. They trade down into it. Bullish order block. Boom. Go even higher. Down close candle, wick the body, extended out in time. Why are they respecting all of these? Because it's in a buy program. They're running higher. They're in a kill zone. They want to go higher and seek higher prices. So they're going to keep respecting these levels. It's beautiful, isn't it? That's why I made this post on Twitter saying this week, like, is it always like this? Because this week is just beautiful price action. Simple as that. We didn't even go to the 1 minute time frame yet. I don't even think we need to, but for the sake of it, I will show you And you can just take a little look at it. Go ahead. Beautiful stuff. What happens? Look at this, guys. So if I zoom back out, let's look at this level right here. Okay, let's zoom back out. What was that level? It was this 2 minute, quote unquote, don't roast me for this, EOB. Okay, now let's look at that on the 1 minute time frame. Go to the 1 minute. What does that look like on the 1 minute? A different style order block. There's not a giant wick on it. But what happened before, this is what I mean by we have to note what has most recently happened. And this is how you come up with your stop loss placement. This is how you come up with order flow, the whole 9 yards. What happened before this happened? Look left. Well, we have this. I'm not going to use this zone. I'll just use this buy side imbalance on the 1 minute time frame. They come down, they fill it, they rebalance it, consequent encroachment, and then they blast off higher. And if you were to zoom out, you're going to see the next 2 minute order block. Here is another inversion. Random, huh? Look at that. There's a fair value gap. We break up through it. They come back down. We're rebalancing the displacement candle here, but we're also hitting this. And then we see what happens. It's beautiful stuff. This is why I say price action is just beautiful. But yeah, they ended up trading super high. And I was kind of bummed because could have made a lot more. So that's all for, yeah. You see that shit? You're not supposed to get sad, finesse. You're not a real profitable trader if you get sad. Guys, I took profits right here. But to be fair, granted, I was trading this 1 minute fractal here, okay? So I was not expecting price to run way up here, although these highs are super clean and crystal clear. Okay? But the fractal I was inside of called for me to take profits here and, you know, above it. Because I should have known better not to cut it off there. I just wanted to get out, to be honest with y'all. I'm sure you've been there before. I was just over it. They're not going to stop just at the high usually. There's orders resting above old highs and old lows. That's why you see them liquidate and dig into it before turning. So I should have known better to hold it for a little bit longer. Plus it was only 10:30. I still have like another hour. And that would only got me up here. And I wouldn't have held through lunchtime. 3:12, 1, 2 o'clock, I wouldn't have held on. All right, so reset chart view. Go to 15-minute time frame. And then you can keep on finding these arrays, guys. This is the 15-minute time frame. If I would have been trading off of this time frame, I would have caught the whole thing. See, now it doesn't really look like a breaker here. Wait, this wasn't the breaker. The breaker was way down here on up. Y'all see what I'm talking about? Those lower time frames that I just viewed were way down here. Now we're in a 15-minute time frame and you don't see none of that stuff. None of that stuff is going on this 15-minute time frame. See all these pink shaded areas? Yeah, let's just do it one more time. I'm not going to talk about it. I just want to show you one more time. If you weren't paying attention, that's all the stuff we went over. All those arrays. But if you're only looking at, one time frame, you're not going to know what's going on. We know what's going on the higher time frames, such as this 15-minute time frame or a 30-minute. due to those super low time frames. And it all blends together and it all makes sense. It's logical. Here's your down close candle, bullish engulfing candle. That's your change in the state of delivery right there, which makes perfect sense to happen on this 15-minute time frame. Why? Because those lower time frames are creating and respecting bullish arrays, and they're doing everything they're supposed to do if price is going to go higher. So this 15-minute bullish candle right here, everything I outlined on that 1 minute and 2 minute time frame, all the bullish arrays that kept getting created and respecting, it took all of those. It took 15 candles to create just this one boop. But then we have this imbalance right here. That would have been your realistic target. Okay? And mind you, all this stuff happened during time macros, during your kill zones. We're going to look to target liquidity and inefficiencies. So every day when you're coming into the market, you want to find the inefficiencies. Where is price inefficient? You want to find the liquidity. Where's the equal highs, equal lows, old lows, swings? But I would say one of the hardest things to do is sitting on your hands waiting for that proper one, because a lot of times you're going to feel like price is going to run without you. And it might take out, like, you might be in a kill zone, right? And price might take out, let me find an example real quick for y'all. It happened to me, I think it's on the next day. What am I trying to say? You think price is already, like, price had taken out liquidity, and then it's starting to go higher, right? And you think that's it. You think the stop run had already occurred, and you think it's going higher now, but then it just comes down one more time. Similar to this. We traded below this low right here. So let me take everything off. This is like the hardest part about trading, and it comes with practice. We traded below this low here. It's 9 o'clock. We're bullish for the day. So you're seeing all these bullish candles start getting created. So you're like, okay, that's probably it. This is going to be the low. Let's go ahead and find something to buy inside of here on a lower time frame, and let's try it. And then price plummets. And then it starts coming up higher again. Okay, no, this is the low. And then it plummets. But when that low finally does occur, and then you start seeing those arrays get created and respected, there, that's what you got to be patient for. It takes a lot of discipline to do that. All right, guys, we're almost done, I promise. Down close candle, bullish, pop, next candle, boop, order block, higher. Why higher? Equal highs. Right before market close, I doubt anyone caught this because it was so close to the end of the day. Why do they do shit like that? I don't know, but I hate it. It's a huge move. So I believe that was Wednesday. And then we have Thursday. Dun, dun, dun. I just now noticed something also. What day was it? Hold on. My post. Oh yeah, that's why. I accidentally traded S&P instead of NASDAQ. And that post I posted with ICT's voice in the background was on S&P, and I thought it was NASDAQ, but the whole time it was S&P. Isn't that crazy? And I want to find it for y'all. It wasn't that day. Was it right here? Bear with me. Sorry. Bear with me. Was it here? No, okay, I'll spend too much time doing this. Damn it. But yeah, if you look at S&P and look at NASDAQ, that's my new experiment I've been doing lately, and I'm really liking what I see. It's really cool. Well, we can have another video and talk about what I'm seeing there, but really cool stuff, guys. Really cool stuff. Thursday. Which was yesterday. I don't think, did I even trade yesterday? I feel like I've been trading every single day, to be honest with y'all. I feel like I've been talking for the last 2 hours. You guys been enjoying this? Inversion fair value gap model. So moral of the story, the 3-step model. That's what I just taught you guys. We can build on this. We can add to it. I'm having a blank moment. And to add to all of those setups, yes, I started. Oh yeah, this is what I was going to say. Oh, I'm still on S&P. No wonder why. Fuck. All right. If you go to your weekly time frame, this is how I found. This is what made me be a buyer, guys. You ready? Down close candle, bullish engulfing. I came into this week expecting this to be the weekly low on NASDAQ. If it's going to go higher, it should do it inside of this candle right here. So when I blend it, here's the zone right here, the order block zone. Note where our current weekly candle low is. When you break that down, you have all the liquidity resting below the lows on these days. So when we traded aggressively lower on this day, that's why they stopped right here. This is a weekly bullish order block. So we're taking out sell side liquidity and then we're going higher. So consolidation, manipulation. This is your weekly power of 3 model right here. Consolidation, accumulation, manipulation, distribution. Classic. The pink shaded area is a higher time frame weekly bullish order block. And I'm not making this up. You just saw it. They take out liquidity whenever they manipulate. And then we get the displacement higher. Distribution. When does the change in the state of delivery occur? Well, I already showed you guys on that lower time frame. So this is something to add to the confluence on this day right here we just went over. On that 1 minute time frame, 3 minute time frame, 2 minute, 5 minute, we went over all the arrays down here. Remember? Well, now we can also add that we're in a weekly order block zone also. And then this hourly time frame, what's it do? Down close candle. What happens after that? Bullish engulfing. That's my change in the state of delivery right there. 9 out of 10 times. That's all I use. Then they trade higher. Okay, now I remember what I did yesterday. I know what I did. Don't leave me hanging yet, guys. Hold on. Don't leave. Yesterday. This was the model I traded yesterday. And again, was I on S&P? Hold on. Yeah, I'm getting sloppy. It's about time for me to log off. Hold on. I want to show you guys this because you're going to like it. If I do this, then it'll work. Okay. Note how they didn't make a higher high right here, and that's why I think I traded the other market, S&P. Let's see. No, I guess I didn't. NASDAQ. Okay. I was looking at US Tech. Very similar markets. And the only reason I was analyzing with you guys on US Tech is because it doesn't have that blue shaded area for the regular trading hours, because that would be distracting. But here was a play in itself. Step 1, turtle soup happens here. Not a huge turtle soup. Step 2, we want to see that displacement in the opposing direction to confirm and tell us that they want to attack opposing liquidity. What's that look like? Well, we have my change in the state of delivery order block. We have our up close candle, takes out stops. Next candle, bearish engulfing. Take the wick to body, extend it out in time. Stop loss gets placed at the body high. Then we're looking to attack opposing liquidity. So that trade would look, say your entry was called the middle of the wick. Stops up here, targeting old lows and a couple points below. Beautiful. You enter on the very next candle. So this entry technique is a 3-candle entry pattern. And then the next candle, power of 3, open, stabs up into the wick to body, then trades lower. If you've been following me, you know that that's one of my favorite entry models, and I'm not just pulling it out of my butt. I have files and files and files of hundreds of examples that I traded of this concept right here. It's the CISD entry model. If you guys see a guy named Mr. White on Twitter talking about one candle changes day delivery, he DM'd me talking about, oh my God, your order block method is so great. You should be charging thousands for it. And I'm like, okay, cool, man, appreciate it. Ever since he sent me that DM, he's on Twitter trying to create a cult using my EOP. Just like this. Telling people he created it, and that, I don't know why that makes my blood fucking boil, but now I know how ICT feels. That's all. Anyways, I hope you guys enjoyed this. I'm about to be back, to post on YouTube. I'm going to be posting on YouTube at least one educational long form video every week. So if you're not already subscribed, please do so. My voice is giving out on me. A lot of yapping. I hope you enjoyed this weekly review on NASDAQ. Maybe we can do another one next week if you enjoyed it. Again, these daily levels also. What am I looking at? Micro, E-mini. Yeah, we had some levels. It's not showing on this exact chart. Anyways, guys, I really appreciate everyone that showed up and gave me their morning and wanted to learn. If you have any comments, questions, or concerns, leave them in the comments section, and I will do my best to answer them. All right, guys. Enjoy your weekend. Give the video a like, thumbs up, favorite, subscribe, all the above. I love you guys. Peace.